Hello, dear traders, and hope you're enjoying this Monday evening wherever you are. It's me here, Mathew, with my colleague Edwin, bringing you yet another session to mentor you in your trading. Today, we'll be looking at how to get set as a trader to start and walk the trading journey in the right way. And so find that comfortable position as you sip your coffee or your favorite drink, or you're taking a rest after a long day work, and tap some knowledge about the FX markets. So feel free to post your questions on the chat, and we'll be looking at them as we check out on this subject matter that we have here. So to kickstart us in this discussion, it's Edwin. Let's see what you have on the slides, man.
Good evening, everyone, and welcome to today's session. So yeah, and as Mathew has rightly pointed out, so today we'll be looking at getting set. So this session entails some of the things that you need to put into consideration as you begin to trade in order to avoid unnecessary mistakes as you trade. So basically, when it comes to trading, the challenge of traders is to find opportunities because the market is dynamic. So we are all trying to find opportunities in the market. So this therefore requires one to focus in order to separate the market action from emotions. So we are emotional beings, and emotions tend to play a part regarding the decisions that we make in the market. So that being the case, you therefore need to know when the right time is without getting your judgment clouded by your emotions. So since you cannot control the market, you can only control some of the actions that you take. And therefore, we shall look at a few things that you need to put into consideration in order to ensure that you remain within the right track. So one of the things that you need to have is a watertight strategy and sticking to it. So when you talk about strategy, we are talking about various ways in which you can be able to spot an opportunity in the market. So you basically need to have a game plan. So given that there are numerous ways of hunting profit in the market, you need to have a well-defined approach. So if you don't have the structure in place, then ideally you'll be gambling. So Mathew, I don't know what your opinion is regarding this. So maybe you can chip in.
Right. Yeah. So trading, of course, it's a market you want to delve in with a game plan, just like you said, and a well-conceived game plan for that matter. You see, I would want to equate this one to something that you're doing, like it's a business, and you want to start a business, for example, in the apparel sector, that is the clothes, or you want to start farming. You see, you can't just say you want to go and start selling clothes. You don't even understand what types of clothes you want to sell. You don't even know where to go and get the clothes. Let's say, for example, it's the men's suits you want to be selling, or let's say, for example, it's the trendy fashion for the ladies. You need to go the best place to you need to know the best place to go and buy. You need to know where to start. You need to know the licenses you need to get. You need to know how you're going to tap into that market. So simply, when you're going to the forex market, you also want to know where do I start? What is the plan? You go into the market, and when I talk about the markets, of course, Edwin, we're talking about we're talking about the charts, like you're looking at the Euro USD. So when I'm saying you're looking at whether you want to, which segment are you targeting, for example, for the type of business that you're doing, talking about Euro USD, talking about indices like NASDAQ, talking about commodities like oil. What do you want to trade in the first place? That's where you start. So that as you're going to have a trading plan or a trading strategy, you understand where you're getting in from. So then you're going to form your rules, and that's what Edwin is saying. That's what you're saying, the trading strategy. So simply, it's like you're entering into something, and you have the rules that are going to guide you. Because you don't have the rules, then you're gambling. You don't know where you are, and you're likely to lose along the way. Yeah.
So with your strategy, basically you have your set of conditions or triggers or signals that you'd want to see happen, especially for those of us who mainly trade on the basis of technical analysis. Ideally, most of the time, you're trying to study patterns on the charts and different structures. So ideally, you need to know what you need to see, the set of conditions, the triggers, the signals that need to manifest in order for you to know that odds are stuck in your favor. So as traders, we want to have these conditions aligning. So once you know what you need to see, you need to wait until when these signals or conditions have aligned. And once they have aligned, then you know that the probability is high for you to get potential opportunity to trade. So one of the mistakes that most traders make is to try to force themselves into setups, into trades without a justification. So before you get into a trade, or before you know whether or not there is a setup, you need to first know what you want to see or what you'd like to see. Then it's a matter of patience. It's a matter of waiting until those events or until those things have happened. Then once they happen, then you will know that is when you have your edge and you can take the opportunity.
Let me add to what you've said. Actually, this is a game of rules, and you want to get in with rules that are going to guide you. The title that we have here is a watertight strategy, and it might be misunderstood that it's really 100% winning strategy. We don't have anything like that in the markets, right? So it's always something that you're keeping on tweaking, changing here and there, because there are rules and you have check boxes. So let's say, for example, you have got like 1, 2, 3 rules that you want to check the boxes before you enter the trade. So how watertight? Okay, the term watertight is going to hold depending with how the markets behave and whether it's going to allow you to check the boxes, all of them, so that at least you've got a high level of confidence. So it can't be like 100% sure, because the market is dynamic. If I can refer to the first slide, what we talked about in the beginning. So it's actually something that you want to keep on improving. But the most important thing is that you need to have check boxes that you need always to tick to help make that decision to buy or sell. Obviously, it's been repeated, and we've repeated several times, several times, that we can only control when to buy and sell. And that control is based on the rules and the check boxes that we have in the market.
Yeah, so examples of such conditions would be things like things as simple as knowing where the direction of the market is headed. Like knowing direction would be one step closer towards identifying an opportunity. So one could be the direction. The other thing could be possibly waiting for the market to make a pullback. So for example, if the market is headed higher long term, one of the triggers or one of the signals or conditions is to have the market making a pullback. Then once the market makes a pullback, you may then determine whether there is a key level at that point in time. So again, when you integrate key levels, this reinforces your ability to know when that opportunity has emerged. Then, depending on the dynamics of your strategy, you should be able to determine the ideal contract size and how to attack the market. And this, therefore, enables you to strive towards achieving consistency in the market. So without a strategy, it means that you have no structure. And if you have no structure, well laid out structure, then you'd not be in a position to strive towards achieving consistency. So consistency is the ability to make a good number of profitable trades, whereby if you are to have a basket of trades, the profitable trades that you take in the market would be able to sort of wipe out the total loss that you might have made on the losing trades. So you don't necessarily have to have so many winning trades. You don't need to have so many profitable trades. But if you can be able to trade in such a way that all the profit that you make with a few trades can be able to wipe out all the loss that you make with the many losing trades, then you know you are in business. So this is just like any other business. At the end of a certain period, ideally you are trying to sort of make a P&L. You match your profitable trades against losing trades. And if you'll be in a position where you can be net profitable, then you will know you're in business. And that is all that counts when it comes to trading as well. Then other times, which point are we? So
last one.
Point 3. So a strategy basically separates trading from gambling. So once you have a strategy in place, it eliminates unnecessary blunders that you're likely to make. So you therefore need to have a strategy so that you can be well directed on what to do. So traders are more flexible with targets based on profits they attain, and sometimes settling for less if you judge, or if they judge that all they can take out of the market at that moment has already been attained. So depending on how your strategy works, you'll be able to know when you can let the trades run longer, or in some cases, depending with the market dynamics. Sometimes you may notice that after getting into a trade, it might go towards the direction that you had targeted. And once the market reaches a particular level, it sort of stalls, or it starts to consolidate. So each trade is different, and the market conditions tend to differ. So basically, given that each trade is different, it's upon you to judge when to exit the market. Is there enough volatility? So if there is enough volatility, then that might mean you'd have the leeway to sort of let the trade run, and then you can decide on how to exit that trade. So in some cases, it may call for you to place a trailing stop so that you can try to maximize on the profit on that setup. In some cases, if the market is not moving much, then it might call for you to cut short your trade once you've gotten the little profit. So basically, each trade is different, and depending on how it pans out, then you should be able to make the call as to the right time to exit the trade. For position trades, in some cases, you might actually have several targets. So for such trades, again, you may ought to scale out, exiting the trade partially at particular, once particular milestones have been attained. So other times, traders extend their targets if market developments are shifting in their favor, but without compromising the risk per trade. So as you trade, you need to have a set amount of risk per trade. So risk per trade is the amount of money that you're likely to lose once you close your trade with a loss, or once your trade has hit the stop loss level. So basically, it's all about managing each trade with the different dynamics that are at play in the market.
Edwin,
Mathew, do you have anything to add?
Yeah, but you've gone deep into trading strategy, and even before we go deep, I would like us to establish between these trading strategies, because there are so many approaches you can have in the market, so many styles, so many strategies. So even before we dig deep into it, what really is it that constitutes a trading strategy? Of course, you're looking into tools, you're looking into all those aspects of risk management and managing the trade itself. But again, there are other aspects you want to put in. For instance, as a trader, there is a job that you do. For instance, there are other activities that you take in that you take in your day in your 24-hour day. Sorry, and at times you want to incorporate the trading plan into everything that you do. So do you want to be a scalper? Do you want to be a day trader or a swing trader? You want to be holding your positions. You also want to listen to your risk appetite. Okay, you also want to listen to how much is it that you feel is the maximum risk you can take in a single trade or even in a single day. All these things will come into you choosing the best tools that you're going to use and the best approaches. Actually, you might be using the same trading strategy, but my approach or my character can be different, and we end up with different results. So as we're talking about the trading plan, as talking about developing a trading strategy, as Edwin is giving us all those aspects and going deeper, the thing is, there are so many tools we have there on the platforms. There are so many strategies you can take up and form a trading plan. But then listen to yourself as a trader, learn all of them, but choose the ones that align with your risk appetite, with your day. For example, you are working, you have a day job, and of course you want to you're getting in trading as a way of earning some extra money, or maybe you have got a few hours of work and then you've got more hours and you want to make forex trading as part of your bigger plan to earn your financial freedom. So all these aspects, you're going to put them down so that you're able to come up with a clear strategy on how you're going to attack these markets. Okay, so it's more of, when we talk about a trading strategy, let's not think about the moving averages there and support resistance levels and breakouts and all those things you're looking at on the charts. It's more of a whole thing that is going to include even your own interests and your personality. So that is one part that we also need to consider as you go deep into forming your trading strategy to get into these markets. Of course, you want to do it like a profession, right? You want to do it as something that you can sustain over time, and you want it to fit in between you and your job and everything else that you're taking in your daily life.
All right. Moving on. The next thing is to manage your expectations. So mostly as new traders, we mostly tend to be trigger happy. So most of the time when you're new to trading, you're always putting trades right, left, and center. Right, left, center. So basically, this is because new traders mostly are fixated on chasing profits as opposed to the process. So most traders tend to overlook the pitfalls that they are likely to encounter, but they are more obsessed towards the end, which is the profit. So if you're not in a position to have a structure, then you're highly likely to fall into this trap. So basically, how can I put it?
Edwin, do you want to say that? Sorry for cutting you. Do you want to say that I should not chase profits? Of course, I'm looking for profits as a trader.
No, we are all looking for profits, but there's that obsession that most new traders tend to have. Like, you don't consider the pitfalls that you're likely to encounter. You're sort of more inclined towards the profits as opposed to the pitfalls.
Yeah,
and
exactly.
So most traders tend to get trapped.
Yeah, I'm throwing in this question to challenge. Sorry, I'm throwing in this question to challenge or maybe to pick up the minds of the traders. You see, a trader, someone who is new in the markets, they want to believe that once you're in the markets and you're buying and selling and you always are the markets, that's when you're trading. But most of the times you also want to restrain yourself, okay, because you're following the rules. And of course, let me mention, because of the expectations, the thing you're talking about is expectations. You see, people are getting into trading from various perspectives. There's someone who has gotten into the trading just because they found in the YouTube someone saying that, oh, this is a very good thing and you need to do it. That's one. Someone might have gotten an advertisement on the social media and maybe the proposition was you get some very nice mentorship. Someone is getting getting the impression that, well, this is something that you're going to do and get rich quick. So you're getting with the expectation that, well, I'm going to land this thing and roll with profits like no other. So where we are picking the motivation to go to trading matters a lot, especially when you're starting. And when you want to have a good start, you want to, yes, there's nothing wrong in you getting the interest and being introduced from whichever media or from whichever person. But again, when you're getting in, you want to shed off all that inappropriate expectations that you have so that you align well with the market. One thing is, one thing I know is, it's if you start something in the wrong footing, yeah, you pick up the wrong footing, you develop the wrong character, you develop the wrong way of doing things. It is going to take very long and a very harsh approach towards correcting again. And that's what we are saying here in this aspect of managing the expectations. Whether you've got in expecting that I'll make a lot of money, whether you're getting in the right manner that you want to develop yourself as a professional trader, it is always good that you understand this market that you're getting in is a risky market, of course, but there are tools for you to understand how to manage these risks, just like Edwin was saying, and there are skills for you to develop. Only the thing that you need to appreciate is that it's going to be a journey, right? In one of my classes, I was asking the traders that why is it that if you want to become a doctor or you want to become an experienced accountant, you will take you appreciate to take 6 years, right? Someone appreciates to take 6 years and take another 1 year outside there practicing and getting mentorship. But when it comes to forex trading, it's yes, of course, you can get money here. But why is it that we want to take it like something you will do in a week or 2 weeks or even 1 month, and you're getting one, and if it doesn't work that way, you want to give up easily? Okay, why is I'm challenging our viewers and the traders outside there. Let's take this thing as a profession. Manage the expectations. It's a journey you're going to build all along. It's a profession, and if you want to build a profession, it's not going to be like a short period of time, and there are costs to pay, right? It's a journey you need to accept and learn, and of course get improving all along. So it's not all about chasing profits, because that one is going to divert you from building the skills, right? You need to take it like you're building your profession, you're building your journey to the next level. So as you're working on a trading strategy, of course, it's not going to be a profitable journey, but of course you want to control the losses. You don't want to get a very harsh beating in the market before you shape up. And that's why we're here, to guide you towards getting the right expectations and telling you have a strategy first, yeah, to get aligned in these markets. Can take us to the next level, Edwin.
So yeah. Before we move on, so traders have to understand that this is a marathon. It's not a sprint. So
exactly,
you basically need to take time and interest to get to understand the markets better. And once you understand the market, you'll be able to know when an opportunity has arisen. Of course, being guided by your strategy, and it's just a matter of patience. So you know what you need to do, and if there's nothing that is showing in your chart, for example, then there's no point of forcing yourself into a trade if there's no opportunity. So know what you need to see, then wait for the market to bring to you the setup, the right setup to trade.
Yeah, and actually, the excitement levels down with knowing what you're expecting and having a plan. Automatically, the excitement settles down. Yeah, and the losses, of course, are going to level down, because it all goes down into a stable mindset, which we were talking about the other day. So again, it just chips into reducing the anxiety and being that calm trader. Of course, knowing you're developing your skill to the next level and knowing what you're expecting, not in the short term, but in the future. What there is something that you repeat. So long as you build the right mindset into this one. I don't want to bring in the aspect of mindset here, but you see these things are interlinked. There's just a very thin line of separation for all of this. So all these expectations, all this control of the anxiety, trading well, you are really composed as a trader, because you know what you're looking for into the future is what is going to build you as a trader. Yeah, and of course, unrealistic objectives, they all get cut down at that point. Yeah. And the journey, of course, gets a little bit smooth. Okay, of course there are pitfalls and here and there, but of course, let me say this, because now we are traders here and we understand. It's more of an uptrend. Of course, you've got dips, and then you have a strong support along that upward trajectory where someone is learning. Yeah, and that's what we're looking. Yeah, exactly.
So therefore, our advice is as you embark on this journey towards mastering this craft, you have to dispense with any unrealistic objectives. So most traders come with very high expectations that once they embark on trading, they'll make quite huge amounts of money within a short period. So that rarely happens. So it's just like any other craft, it will take time. You have to dedicate time. And once you attain the necessary skills, then you'll obviously be able to get where you want to be. Otherwise, yes,
yeah,
Mathew?
exactly. I want to have some comments here, Edwin. We have quite a lot of comments coming in through the YouTube, and hey, Amram is saying he's Amram is listening and viewing us from Kitengela. Thanks so much.
Okay.
Yeah. Someone asked questions, and of course, we're going to look at them. Aman is asking, what are the effects of trading on emotion, especially on a scalper? How does emotions come about during trading? Yeah, maybe Edwin, you want to tackle that?
So basically, most of the time, it's very hard to know that you're trading out of emotions, but what you will notice, especially for scalpers, those people who play so many trades frequently, on and off, that is one way of knowing that you're being led by your emotions. So the fact that you're putting many trades within a short duration, that in itself shows that you're sort of you're sort of gambling. You're gambling, actually.
It becomes very tough to realize,
and it's very tough.
It's very tough.
Yes, because what happens is that not only will you lose so much money through commissions and spreads, but you're more likely to get trapped in one trade and have that trade running so much against you, such that the loss that you will incur might actually wipe out all the profit that you might have made on those many small trades. So yeah, so scalping is one way to know that indeed you're being led by your emotions, because you're actually getting into a trade and you're targeting to sort of close that trade immediately, like once you've made very few coins on that trade. So yeah, so that is one way.
I want to chip in a little bit, especially on the aspect of not knowing whether you're slightly sliding into emotional way of trading. Okay,
yeah,
and
yeah.
I want to create an argument around scalping and having emotions while trading, because you see, when you're scalping, is something I've done. When you're scalping, sometimes the trades you're looking into taking advantage of very small moves in the markets. But again, you see, when there is volatility, sometimes the trade might pan out pretty much well, or sometimes turn out against you very fast. So if you don't have the tools to control, especially to manage the trade, especially like a trailing stop, it can be a very bad experience because you're waiting for very small moves, and again the market is changing very fast. So yes, scalping can very fast result into emotional trading. Okay, but again, it can be a very profitable way of trading if you have the tools, or you know the tools to manage the trade. It's something I've experienced personally, and I can attest. I can attest to that. And on the bit of understanding when the emotions are setting in, if you don't take, if someone is over trading or constantly in the markets, that's when it becomes difficult. And of course, not giving trade some time to flow, so that you have, again, give yourself some free time to think of what is happening in the markets. So that high frequency trading and doing the markets yourself, then you don't have that time to check out on your state of mind. So it becomes difficult. So I think it's always good to relax in between the trades. You don't want to have them so close, especially for a scalper, to try and feel yourself. Am I like, where is the excitement coming in? Am I even anxious, right? What do I feel? Okay. So I think, yeah, it's scalping has got a way of bringing that one, but as well, trade management can be something very important in this one. So yeah. On the other end,
if you ask me before you carry on, scalping is quite it's quite a slippery road, because the way I perceive it, if you cannot put a trade and set your stop loss and take profit and leave that trade to run for some time, then it means that you're not comfortable holding that trade.
Man, like for me, I cannot scalp without a trailing stop.
And emotions will set in. So yeah, so if you can't place your trade and set your stop loss and take profit and leave it to run, then in most cases, emotions are likely to kick in. So yeah,
and scalpers are.
That's the whole essence. That's the whole essence of having a strategy, because you know what you need to do, and you know see so that I can pull the trigger. So that's the whole point.
Yeah. So yes. As we close down this topic of scalping, and I hope you're answering our friend Aman on this. Well, scalpers tend to be people who can take up huge risks in the markets, and of course, the aspect of expectations, I have to bring it here, because the reason why someone would want to take very fast or high frequency trades, of course, looking forward to or expecting to get very huge profits, it's more of high expectations, and they tend to trade along where there are big moves in the market. Of course, they can rip off some good profits, but if they go wrong, they go wrong terribly. So again, I would urge that we reduce the expectations a little bit. Get to target something reasonable, something small, even as we're looking at those high frequency trades. All right. So let me also looking here. We have Rombo saying tuned in. Awesome. That's great. Someone else is asking about FXPesa providing robots to traders. How can TradeRobot be linked to FXPesa? Of course, that one is there. You're able to link your robot. Okay, you just have to go to just make sure that you install the expert advisor perfectly in your laptop. Then you can move it always, or you can go to that's something that you can look into some other time. Just maybe go to the file, you open the data folder, make sure you place it directly into where the MT4 is, and then you can always set it up, and it's allowed on our platforms. You can always use the robots or bots to trade. And Maria here is saying, giving them quite some nice information. Thank you so much, and keep tuning in. There's quite a lot which is lined up for you. Of course, not only me and Edwin, but we have our one of our own. Again, we have Maiden, we have Shanti. They've got quite some great content to give out to you. Edwin, someone saying thank you so much for talking about the spreads, and that's exciting. So maybe
you're most welcome.
Take us to the next level.
So so as we have said, the prospect of becoming rich within a short period is almost impossible. So ideally, you should try to trade in such a way that first of all, as a matter of priority, you should be able to protect your capital, because if you cannot protect your capital, then you'll be out of business. So ideally, as a matter of priority, trade in such a way that you'll be able to protect what you have. And once you have a good strategy, then profit will almost come automatically. And remember again, you don't have to be right many times. you can actually have a win rate of 50% or 60% and still be profitable. So we're not saying that every other trade will be able to earn you profit. But if you can have a decent win rate and be able to win more money when you're right, so letting your profitable trades to run to the maximum and cutting short your losing trades, then you'll be at a better place to grow your account, because as traders, that is what we are trying to achieve at the end of the day.
Mm-hmm. So
yes.
let me chime in here with say Tim or Chime, I don't know, or Kim, I don't know the right one to use, but just let me get in here with
Chime in.
with with the perspective of the long-term view into these markets, and of course looking into the capital, and let me say that the worst thing, and this is what takes people out of trading, this is what gives people bad experiences in this market, especially when they're starting up. You have a trading strategy and you have the right expectations, but then the worst thing that can happen is someone losing their capital, right? You lose the whole of your capital, you have got nothing in the markets, right? It's like you go to war and you don't have tools. Yeah. How do you protect yourself? Whether you have skills, whether you have the right mindset, and you've lost your money, what will you trade with? You have a zero equity in your account. What do you trade with? So rule number one, and this is of course in line with having a trading strategy. Trading strategy is going to encompass risk management, having a stop loss, and being able to protect yourself from losing a big amount of capital, so that you're buying yourself more time with the capital you have to be able to hone your skills all along, because you've said it's all about trending or walking this journey. So always be keen not to jeopardize your capital. And also, Edwin, I want to analyze the word growth. You're looking for growth. Yeah. You're looking for growth. So look at it and expect to get that scale and be better in the future. Look at it like a growth process. It's small bits of profits, and of course small bits of losses, because you can't you can't trade without losses. It's just a matter of cutting them, just like you're saying, Edwin, that you always repeat that what matters is how much are you losing and how much are you gaining. Yeah, you want to make sure you're losing some small percentage of your account as you're getting more, a higher reward. So the chances of growth is that you need to at least peg onto smaller profits, yeah, and then you compounding them, because of course the power of compounding even small amounts of profits is so great. It's so great that traders do not actually want to give it. Traders don't actually notice it. Yeah. Doesn't have to be like you're making big profits every day in, but if you can make those small profits, but continuously having that growth and having the expectation that you're going to build that big capital, build that trading culture, that trading momentum and consistency in the long term is really very important. So yeah, managing the expectations, expecting the growth in the future, and of course building the right skills along the way.
Yeah, and it can be very unfortunate, because the online trading business, with online trading, traders have full control. Like, you're not committing the whole amount, unlike other businesses where once you start a business, you're sinking the whole amount. So you're all in, whichever way the business goes. The beauty with online trading is that you're not sinking the whole capital. You're partially using your capital in order to take potent opportunities in the market. So as Mathew was pointing out, it's a matter of looking at it with a long-term view. And the best approach is to sort of like apportion small amounts of capital with so many opportunities, so that as you take more opportunities, you can enhance your ability to grow the account. So the ideal approach is to have you risk small amounts of capital with many opportunities, as opposed to risking huge chunks of your capital with few setups. Because at the end of the day, the market is there, it's not going anywhere. And if there's no opportunity today, perhaps tomorrow you might find 2 or 3 opportunities. So why not save capital which you could have otherwise spent on trades that didn't have any potential, or and perhaps by waiting for other opportunities in the near future, it could be tomorrow, it could be the day after tomorrow, maybe those opportunities might portend better results than forcing yourself into trades when you can clearly see that there's no opportunity. So yeah, so that should be the right approach.
I think
commit small capitals with many opportunities, and don't put or don't commit so much money into few trades. So yeah, exactly. that should be the approach, ideally.
Exactly. Yeah. So there's something I want to throw in. This is a market of abundance, and I would like the traders to have the mindset of abundance, right? Just by losing a single trade today, it doesn't mean that you have to go following up again the same before the day ends. You have to recoup that that loss, because that's what leads to mistakes. And again, it means you are expecting to be winning all along.
As a matter of fact, what is likely to happen is that you're likely to lose more.
Likely to lose more. So this is a market of abundance. Like every single day, you have those charts moving. You have new events coming up. Okay, right now we're talking about the Russia and the Ukraine issue, right? And right after this, because of course this war will end. We're always optimistic. One day it will end. But again, do you think that will be the end of opportunities in the market?
Absolutely not.
If someone is not able to get good trades currently, because the setup is not coming up, there's no reason of trying to force trades which are not aligned to your trading strategy, because of the expectation of growing so fast within this crisis. There's always the next time. There is always setups for you to place trades. There will always be crises, and there will always be things to move this market. So it's again, I tend to slide back to mindset, but again, let's always expect and always hold strong that this is a market of abundance. They can always find the opportunities to trade.
Mathew, do you know something that I don't? You sound like you're talking from experience.
No, not really. But you see, I'm always skeptical about times when you find there are great opportunities. Yes, of course. You see, when there's something which seems to offer some really good deals in the market, there's something lacking as well. There's some danger lacking there, and it's a lesson I've learned. Of course, it's a psychology I've learned. Of course, through the hard way.
Yeah,
that's why I'm bringing it here on the topic of expectations and of course a trading strategy. So there are opportunities, but when you find those good opportunities, trade even more care in the markets, because you want to protect your capital. You don't want to jeopardize your capital, and you're looking into growth, small growth all along, consistency, and not just to be rich or get a lot of money within that single crisis. But of course, let's not forget that millionaires are built in crisis, during times of crisis. But as well, people become so many people also become bankrupt during those times. So it's a matter of striking a balance anyway, and the expectations. Yeah. So I don't know, Edwin, we have some more. You have something more from the slides, so you can
basically that's pretty much it. We'll be looking at more in the coming sessions. So that is all we had to cover for today.
All right, it has been quite a lively evening, and of course here we have the social platform that you can find us and engage us more. we're looking forward to keep on speaking with you, our clients, and getting the questions from you, all things that you would want us to respond to. Check out on the FX Pesa Facebook channel, on the Twitter. I hope you're able to engage with Ben and Monica on our last Friday's engagements around the Women's Day. And of course, get us on LinkedIn, especially for the guys who would want to look for opportunities here. Of course, there are sometimes you find them there. On the Telegram, always active there to chat with you. And here, always keep on bringing you good presentations to keep you mentored. And for the guys who have always kept on engaging with us on the YouTube, thank you so much. We've enjoyed it. We are happy to keep on speaking with you. On the other end, we can meet physically on the workshops, can meet Edwin and meet me, meet our other trainers in our satellite offices in various places. And we'll always be happy to speak with you. So, dear traders, have yourself a great evening. See you next time.
So bye. See you next time.